This is The Discourse with Dr. Ken.
Yeah, what has been on the lips of everybody down on the streets this week, and not just the streets, for a couple of weeks now, and that is the energy price hike. And we were trying today to relate it to cost of living in Nigeria. So energy price hike, I should have said fuel price hike, but it's beyond fuel. And I decided that we should expand the conversation and say energy price hike and the cost of living in Nigeria. Who do I have? No other than Tilewa Adebajo. Tilewa Adebajo, how are you today?
Good afternoon, Dr. Ken. Fine, thank you very much.
Fantastic. We have a great topic. It's a topic that is on the lips of everybody, so I thought there couldn't have been any better commentator to discuss this with me today.
Thank you very much. Honor and privilege always to be here.
Yeah. So, as is customary, let me take a very short profile of Tilewa Adebajo. Tilewa Adebajo is an investment banker and an economist. He's the CEO of CFG Advisory and has wealth of experience in executive leadership with proven track record in strategic financial advisory, corporate governance, and strategic planning. Tilewa has been instrumental in driving organizational growth, navigating complex regulatory environments, nurturing strong stakeholder relationships, and facilitating substantial financing. Tilewa is proficient in conducting critical economic analysis, shaping financial market insights, and leading complex transactions. He is known for his dynamic approach to economic policy advocacy and has keen understanding of media and communication. And more importantly, and we are going to discuss part of his life today, equally, Tilewa Adebajo is also chairman of Stationary Stores Football Club of Lagos. Once more, Tilewa, you're welcome.
Thank you very much, Dr. Ken.
Fantastic. I would want to take a bit of preamble, before I go into the questions. Last week, I was sitting at the Koi Club and some group of people approached me and said, listen, why do you bother every time you discuss Nigeria, you discuss the issues around the price, cost of living, the crisis, the economy, so I sensed there's hopelessness, and they were asking me, why do you bother? Why don't you just, take it as it is? And I said, no. You see, we'll continue to discuss that because the current mood of the nation is defined by a question mark. And I read Chidi Amuta last week. I don't know if you did. And he's saying that this is quite true, that you hear this question mark in the marketplace, on the streets, airport lounges, and even in boardrooms. So it is important to continue to discuss Nigeria and discuss what we are going through. And in fact, raise basic questions in order to understand the vision we are running with. Because it's important we even understand the vision we are running with. So question is, in style, values, goals, performance targets, and national character, what kind of nation is this current administration aiming at, in your estimation, Tilewa?
Very interesting. I think what shocked everybody was the pronouncements by the World Bank economists.
Yes, we're going to get to that.
That it's going to take 10 to 15 years to resolve the Nigerian problem. And I think as far as I'm concerned, let me state very clearly that I don't agree with the World Bank's position.
Okay.
It's an overreach. And I think their involvement in the Nigerian economy or economic space, I think, is getting too much. The levers for the control of the Nigerian economy is firmly in the hands of the Nigerian government.
Okay.
And it is the Nigerian government that has to decide how it wants to run this economy, what kind of economy we want to run, and then can use organizations like the World Bank and the IMF, the African Development Bank, and other development financial institutions across the globe, and other bilateral loans according to its strategy of implementation.
Okay.
I'm not very comfortable with our government officials claiming endorsement of the reform program by the World Bank as a badge of honor.
Okay.
I think these economists are overreached themselves, and no wonder some of them refer to them as economic hitmen.
Okay.
And that is why the World Bank gets the sort of reputation it does. The IMF on a regular basis conducts an Article 4 report where it comes into the country quietly, engages everybody, and then comes up with his report. We shouldn't also forget that Nigeria is a shareholder in both the World Bank and the IMF. And these Article 4 reports are statutory engagements which they have with other countries. You don't see the World Bank economists going to the US government or the UK government or the German government or the Japanese government and telling them that they're endorsing their reform programs. All those things are done in the background. So that is a concern to me.
Okay.
So having said that the levers for the control of the Nigerian economy is firmly in the hands of the Nigerian government, then this government needs to define its economic policy and agenda.
Some kind of vision,
You know, where are you going? And it seems to me that all we're hearing is reform. It's not just about reform, but there has to be a plan to grow the economy. And to put the economy on a path of sustainable growth.
Okay.
Nigeria's economy is in stagflation. The World Bank is not talking about that. Nobody's talking about that. There's high unemployment. And, you know, we know that inflation is running out of control. And this fuel or energy price increase you've talked about has already caused inflation to spike again, despite the small respite we've got in the trajectory of inflation. So the government of Nigeria really has to define, or this current administration needs to define its economic policy, the deliverables, and the timeline, not the World Bank.
Okay. I'm happy with that intro, because we're going to discuss these policies, we're going to discuss some consequences it has brought, and we're going to discuss other germane issues that are plaguing just not only our economy, but our national life as a whole. Remarkable leaders, or in fact, anybody who should be a remarkable leader, who wants to be known as a remarkable leader, is that who wakes his nation and takes it along an unfamiliar road. I like to call that road never traveled, which is road you've never traveled before, but have been longing to go, somewhere you've been longing to go. So, because I know that in modern democracy, successive leaders come to power with the aim of recreating nation along definable lines. Have you seen those lines?
Not yet, unfortunately. What I've seen is that we have, in the last 1 year, put the cart before the horse.
Okay. How do you mean?
Well, when you talk about these reform programs, I think most of the reform programs are laudable. I think nobody's arguing about the reform programs and what we need in Nigeria.
Okay.
The structural reforms, long overdue. It was this same government that went to occupy Lagos when some other government tried to remove the subsidy and tried to get some national consensus.
Okay.
They protested vehemently against it. Now, as I said, karma is something else. And now you can see the karma. Now they're in government. They now have to deal with this. And they've not handled it properly, unfortunately. If you want to deregulate or you want to remove subsidies, there's a lot of sensitization that goes with it. Apart from sensitization, there's also a plan. Now, the reason why I'm telling you now there's no plan is that you know that the impact of removing fuel subsidies is that it's going to cause cost-push inflation.
Okay.
So you know that you have to factor the effect of that inflation ahead of time in your planning.
Okay.
So if you want to remove subsidies, you know that there's going to be an inflationary impact. So you need to coordinate with your central bank to understand that, look, we're going to expect prices to go up.
All right.
So how do you prepare for this ahead of time? Now look at what has happened. Because of the inconsistency in the implementation of the removal of fuel subsidy, the central bank was dealing with inflation. They increased rates by close to 900 basis points in the last 1 year. They have increased the CRR from like 32% to 50% in 1 year. And they've tightened stance. They have done 7 trillion of open market operations in the last 7 months, or 9 months. They've done about 7 trillion. So they're tightening. But guess what? Just as they started to impact, we started to see the slight reduction or the downward trajectory in inflation, then you increase the fuel prices again. So that makes nonsense of the monetary policy. You see, so you should have
A plan. A master plan.
Exactly. So this shows me that you don't have a plan. Because if you had a plan, you understand that let us see it through. You want to. So now the fuel price hike has now come to be more of market driven, because we know that the international Platts prices for fuel is like 52 cents a liter. And this current pricing is reflecting
of that. Yeah.
So you can see the 52 cents and then you can see the margin. So we're seeing our fuel now around at about 1,000, which makes sense of that, because 52 cents, or it's about at 1,700. You know that 52 cents is about what, 650. 700. So maybe about 800 naira, 700. So you can see there's a 200 naira margin to be made on the petroleum prices. So, but you can see that price reflection on the current fuel prices. So we're there now in terms of fuel prices increasing market, but it's taking us a whole year, more than a year,
to get there,
a year and a half to finally see this thing through. But in the meantime, it has thrown off monetary policy. So that's why I'm saying that there's no plan. Then of course you have to understand the impact on the foreign exchange. 200% devaluation of the currency in 1 year.
Yes, we'll go to foreign exchange, because it's the twin whammy, double whammy, if you call it. So, you mentioned Endemic Jail, that is the vice president of the World Bank. So, from what you are saying, he's not a good Samaritan, he's a bad Samaritan, isn't it?
No, I won't say. I'm not going to question his integrity in terms of whether he's a good person or a bad person, but I want to focus on his pronouncements.
Okay.
I think that his pronouncement was an overreach of World Bank. You don't come into a country's economic forum and start telling them that the policy is going to take 15 years.
Yes.
And the reason why I actually questioned him is the fact that he hasn't backed it up with any research, or any data. And the recent
I was surprised at that.
Yes, and the recent World Bank reports that they came do not have any data sets to back up what he's saying.
What he's saying.
So for somebody at that level,
it sounded frivolous.
It's a very frivolous statement for someone at that level, because if you're going to say that, you must back it up with economic research.
So,
but like I've said, if the government of Nigeria does the right things, we can resolve this problem in a year or two.
Okay, and that's where I'm going. So you talked about the elimination of subsidies and the changes in exchange rate regime, which of course has triggered inflationary pressures and exacerbated the cost of living for majority of Nigerians. I get that, but question is, going by what has been said and done so far, should Nigeria avoid the temptation of short-term fixes of the current government, or should just press on with the reforms?
Well, you can't have short-term fixes. You have to sort the structural issues out.
Okay.
And what is the problem of Nigeria? Okay, we need to understand the problem of Nigeria.
Okay, please tell me.
The problem of Nigeria is very simple. We need to put a permanent solution in place for the vagaries of the international oil prices and the fluctuations. Norway has set up, we need to emulate a country like Norway and other oil-producing countries, Dubai, Saudi Arabia, the rest of all of them.
Okay.
They have already set up their sovereign wealth funds. The Norwegian sovereign wealth fund has been built up to $1.6 trillion. And last year returned $215 billion in profits for the Norwegian government and people. So Nigeria, unfortunately, we're still subject to the vagaries of the oil price. We've not yet put in what I would call the buffers to be able to withstand these shocks. Now,
you're just left to the elements.
Exactly. At a point in time in this country, our excess crude reserves was $25 billion. Excess crude.
Okay.
And our reserves were close to $70 billion. Now, instead of them saving this money and putting most of it in the sovereign wealth fund, two governors, Amechi and Fashola,
they went to court.
And said that this money must be shared. Now, Fashola, look at Lagos now. In how many years of this government, this same party in Lagos? 24 years? They've not been able to build 50 kilometers of a metro transit line for a mega city like Lagos. So what did Fashola do with that money? Look at Amechi as a governor. He has an abandoned monorail project also in Rivers. So what can they point to all this money from excess crude that we've got?
What have we done with it?
What have we done with that money?
Okay, so maybe the answers will
You
come
see,
up.
so these are the issues you're saying. So if you do not put in a structure that will help you buffer the fluctuations in oil prices, our exchange rate begins to suffer. Then added on top of that, government spending has become excessive.
Okay.
I mean, we all sat down in this country under Buhari when he spent 23 trillion illegally in ways and means.
Ways and means, yes.
We all sat here and we all looked at it. Nobody said anything. And this government last year spent another 7 trillion within a 5-month period on ways and means. Okay. Now they've stopped it.
Yeah, but it's done.
But the fact is that
it's been done.
Money supply is now 107 trillion naira.
Yeah.
Which has doubled from last year. So that is the problem of Nigeria. So if you have that much money supply, despite all the tightening that the central bank is doing, it's not going to work.
Not going to.
This is The Discourse with Dr. Ken.
If I summarize, what it takes me to is that, yes, you have kind of said that we have had periods of poor oil and other forms, various types of mismanagement or management. This has left us, talking about Nigeria, trapped in cycles of boom and bust. This also, in turn, brought painful consequences for millions of Nigerians like we're experiencing today. So how do we begin to introduce the fiscal responsibility laws, build external reserves, and again lay the groundwork for growth? How can all this be done with less pain?
Good question. There was something you asked me earlier. You said, what vision do we have for this country? Which is the country that Nigerians like to go most to? Is it not Dubai?
Okay.
Everybody wants Nigeria to be like Dubai. Everybody, Dubai. Why can't Dubai doesn't have our oil wealth? It just has a very low population. Okay, but they have diversified from oil into tourism, and they've built an airline industry as a major hub to the world. And you can see that they've created a hub. So the Dubai International Airport is the second busiest airport to Atlanta Robertsfield, which is the first. So the question now is, you see, I'm very tired really of answering a lot of these questions, because when are we going to get there?
Yeah.
You see, these things are very simple. They're not very difficult. But when you create successive problems over and over again, then we're now dealing with short-term fixes. So now we have a problem with inflation. If we do not deal with inflation, the economy cannot grow.
It's like bringing the body temperature down first.
Yes. So, so whatever it is you want to do now, you need to start ensuring that within 1 year, you need to bring inflation down. So all of a sudden the problem becomes inflation. You have a government in the World Bank alluded to, the World Bank related to the Obasanjo years, when Obasanjo paid out the debt of Nigeria. At the time Obasanjo paid the debt down, certain things happened as a condition of that. Section 38 was inserted into the CBN Act in 2007. The Debt Management Office was set up, and debt management was taken out of the central bank. And an independent debt management office was set up under the auspices of the Ministry of Finance, but also on the board there was more representation, not only from central bank, but from the federal government, the finance, accountant general, so that there was balanced representation on the debt management office, which has done a fantastic job, at least in managing the debts. We know what our debts are. At a point in time, we didn't even know what our debt numbers were. So, and we had to spend a lot of money to reconcile those debts. So now we have a proper debt management office. And also on the back of that, the Obasanjo government also set up a Fiscal Responsibility Act. They passed the act, which also included a Fiscal Responsibility Commission. So at that point in time, under Obasanjo now, Obasanjo had put all the debts, the debts was about 30 billion then. He paid it down, and today our foreign debts are now back up to about $90 billion. So you can see that not only have we gone back, we've increased it 3 times.
Yeah, gone full circle.
A full circle. But don't forget, Obasanjo paid it down from 30 to 0.
Yeah.
So we have now taken it now from 0 to 90. So
we're progressing in error.
Well, I guess that's a good word.
Yeah.
So all those laws and all those acts were put together as what we'll call financial circuit breakers. So avoid us getting into this situation again. So when you have all those laws, those are like financial circuit breakers. And we all know what circuit breakers are.
Yeah.
So, but unfortunately, during the Buhari regime, we decided to ignore these financial circuit breakers. And we went to town and we pounded up debt. And at the end of the day, we're paying the consequences of that. And our money supply has now reached 107 trillion naira. And inflation is at a high of 32%, which is the highest in the last 15 years.
I'm happy you've hammered so much on this inflation because it is really at the core of Nigeria's current economic predicament. And like you said, inflation has soared to its highest in nearly 2 decades. So, but if I may ask you, how would you have approached a remedy if you were in charge of the monetary side of things for Nigeria?
Well, I'm not in charge of the monetary side of things, so I don't want to delude myself.
Yeah.
And I'm just a commentator.
Okay.
And the people in charge of the monetary, they understand the situation. We can all see what the situation is. And they need to be able to craft their policies. And apart from crafting their policies, they need to communicate those policies effectively, not only to the populace, but also to the investment community, to the business community, to be able to get buy-in and support and credibility for all those policies. As I've said earlier, the control, the levers for the control of economic growth and development is firmly in the hands of the government.
Okay.
So it is up to the government to devise the right strategies.
It's their responsibility.
And do what needs to be done.
Okay.
As you can see, it's not rocket science. You saw what happened in the States when inflation was hitting 9%. The Federal Reserve Bank took a stance, and it took them 2 years to bring inflation down to about 2%. And that was when they finally decided to go with a 50 basis points rate cut. At the point they did the rate cut, the markets rallies, it's stimulating the American economy. And now we're beginning to see or project significant growth numbers for the U.S. economy. So you can see all the other economies.
There are templates you can learn from.
Yes, there is what they called it, what do they call it? Orthodox management. So they're tried and tested models that we have.
It's not there.
So, but
don't need to reinvent the wheel.
So, but when you decide you want to do something and say, oh this is Nigeria, no, there's nothing like that.
Yeah.
So I've always said, so it's not for the World Bank to come and tell us it's going to take 15 years. It's the government that is in control. If the government today, like my own suggestion, if you ask me, my own suggestion is that there are 3 things that needs to be done in Nigeria today.
Okay.
First of all, we need to restore fiscal discipline.
Yeah.
We need to go back to the tenets of the Fiscal Responsibility Act.
Okay.
We need to stop ways and means financing and put in serious fiscal discipline.
Yeah.
You know, the budget next year, there needs to be budget cuts, austerity in terms of spending, without a doubt.
Yeah.
So we're not spending ourselves out of a recession this time around.
Yeah.
That's not the situation, because some politicians like that argument. That's number 1. Number 2, we need to ramp up oil production back to 2 million barrels.
How do we do that?
Okay, that's very simple. I've spoken to some experts in the oil industry. They've identified specific assets that if the government does the right thing, those assets can bring up production of close to 1 million barrels within 18 months.
Okay.
Or less than that.
Oh, really?
And then with the incentives they've now put in place for the deep offshore exploration, then you can begin to explore people, get investors to come back into the industry. Then the last thing is that we need to sell down some of the JV assets equity and raise about $50 billion.
Okay.
With $50 billion, Nigeria can ease the debt burden, and then we can refinance NNPC for sustainability and provision of FX. Because when NNPC is working properly, then they're driving revenues and they're bringing in the FX into the system.
Okay.
Which is very, very important for us too. So, NNPC should stop financing its operation by selling its crude oil forward. That's the wrong method of financing.
Yeah, staying with FX, according to the CBN, and I'm staying with both FX and the CBN. Do you agree that the Naira real exchange rate now is at its most competitive rate in 20 years?
No.
Okay.
You cannot begin to talk about FX range because we are devaluing our currency to pander to the World Bank. And even if we had to devalue our currency, it's not by a free fall and 200%. First of all, we need to acknowledge the impact of mismanagement in that devaluation. Okay, you don't let your currency free fall. It was badly managed.
Okay,
so there was no need there's no country that goes to a 200% devaluation in a year.
Yeah.
If you take a look at 30-year history of the dollar to the pound, the variation in the fluctuation of those two rates of a top international currency, very minimal variations. If there's a 200% devaluation in the United States, then there's a crisis. There's no war. We're not fighting a war. There's nothing that is changing it. It's simply mismanagement.
Okay.
And that is where I have a problem. When this government came in, they knew they wanted to merge the windows. They should have done a gradual approach. There was a vacuum in the leadership. There was no finance minister. There was no CBN government. The CBN governor was acting, and a lot of people are unsure of his status at that point in time.
Yeah.
And, nobody knew what the government was going to do with the central bank. So, and by the time you just made an announcement that there's no more subsidy, people did not understand what that was.
What that meant and what the consequence would be.
Exactly, and what you saw was an impact on the currency. If you had managed that, I don't think the Naira would be more than 700-800 today. Because you'd have done a gradual devaluation of the existing system, within the existing system, and then quietly shifted the windows. Because it was government that created all the other windows. Nobody else did.
Okay.
So all you had to take was government to stop using that window and move into the new window. And then you go with a gradual devaluation. Maybe you're looking at 3-5% every month, and then you're looking at it as the demand is coming through, and you restore confidence in the markets. And since you didn't have the dollars, then you had to start looking at ways to bring in dollars, encouraging people, the inflows, the 21 billion diaspora remittances we get every year. You needed to liberalize their entry into the system and to facilitate supply. So it should have been a gradual process, not the free fall that we saw. So that is my own...
your take on that.
That is my take on that.
Okay, and I'm going to come back to the supply and demand side of the dollars. But staying with the exchange rate, can Nigeria, because what is done already, but can Nigeria witness a reversal of this current terrible exchange rate regime like that we have?
This is The Discourse with Dr. Ken.
Like I said, if you sell the $50 billion, what is your issue with foreign exchange? The question we're saying is that what are the sources of foreign exchange in Nigeria today? Diaspora remittances between $21 to $25 billion a year. FDIs, then portfolio inflows, which have dried up. At their height, portfolio inflows were close to $18 to $19 billion a year. Right now, that's down to like $2 billion a year. So that your supply sources have dwindled. Because there's a lack of confidence in the economy, and people are not looking at investing in our bills, and of course the interest rates in the developed markets were a lot higher then. Now that they're cutting rates abroad, then are we able to spur a return of portfolio investors? I think the confidence issue is still there. We're very lucky this week that also the CEO of JP Morgan Chase, Jamie Dimon, came to Nigeria. JP Morgan Chase is looking at coming into Africa fully, but they've been in Africa for 60 years. And it's also pertinent to know that JP Morgan actually manages our reserves. It's been something they've been doing for a very long time. They've had that reserve account for a while. So I think that's also important, that it's a very big customer to the Nigerian government. The Nigerian government is a big customer of JP Morgan. So, but that's a good boost that Jamie Dimon came and gave a good impression on Nigeria, and those are the things that we need to channel to be able to boost Nigeria, because if those sort of big banks have the confidence in Nigeria and Africa, then it will the interest for Nigeria, I think, would be would pass through. We need to ride that wave of this visit. So exchange rates, I think, is based on supply, and we have a lot of things wrong with our economy right now. And until we restructure our economy and get it back to the path of growth, we will not begin to look at foreign direct investment. Was $29 million in the half year of this year. You know, that's
very paltry.
It's not even paltry. It's nothing.
Yes, it's nothing. But
nothing.
See sitting with the supply and demand side of this exchange rate. You see, the equilibrium price of supply and demand is the plank of the exchange rate conversation. Quite all right. So the question I ask is it easier and better to focus on the reduction of demand for foreign exchange than to try to boost the supply side?
Okay. When you take a look at the supply and demand, there's a lot of distortions on the requirements of foreign exchange here. So if we take a look at dollar, first of all, who is our biggest trading partner? Our biggest imports is from China and India. Okay, and now that we do not export, we are not importing petroleum products anymore. The reliance or the requirement for euros or dollars, I think, has gone down significantly. So the question is, if you are doing 15 to $18 billion worth of imports from China every year, and that's your largest trading partner, and India, who is looking at another currency, then what is the issue with the dollar? Why are we looking at dollar convertibility to trade with India and China? So because the dollar demand on our economy does not reflect our terms of trade. Okay. So there's a distortion in that aspect, because we should not be going from naira to dollars to renminbi or yuan, or from naira to dollars to rupees, Indian rupees. But we should be able to go straight, and we need to be able to understand where our terms of trade are coming from. So it's not an accident that the Chinese government deliberately ensures that its currency is always devalued against the dollar. So if the dollar...
They have enough to export.
Exactly. They are exporting significantly to both the American markets and the European markets. And since we are import dependent, then we need to be able to adjust our terms of trade, because the dollar is not... The demand for the dollar is not reflected on our terms of trade. Dollar is not what we use to import. Okay, we're not importing from dollar-based countries. So if you discount that adjustment, then you can take a look at that. But my own consideration, very sincerely, is that having looked at the current status of the Nigerian economy, I think right now we're having more of what you call a market reflective rates in terms of how the dollar has stabilized. But I think it's still a bit too high. However, my own projections for next year is that I did a guidance for this year in 2024, which has proved correct. We told everybody that we're looking at a guidance for the dollar between 1,500 and 1,800. That was the band that we did for this year. We predicted that in January, and that held firmly this year. However, my concern now is that we have fiscal indiscipline. We have an expected 20 trillion budget deficit this year. Money supply has hit a record of 107 trillion. Inflation is still on the upward trajectory. And if I take a look at all those areas, I have now shifted my guidance for foreign exchange for next year for budgetary and planning purposes to 1,800 to 2,100.
Okay. 1,000 or 1,200?
1,800 naira. The band is between 1,800 to 2,100.
2,100.
Yeah.
Wow.
up from 1,500 to 1,800.
Okay. Wow.
And that's it on The Discourse with Dr. Ken.